right, good morning, everybody. Today is November 10th, 2021, and I'm back with another brief edition of the Wednesday Live Show. Today, the CPI numbers came out, and the Consumer Price Index showing the rate of inflation is rising, or I suppose has risen, 6.2% year over year. So inflation is here, and that's the talk of the town today. And boy, I'll tell you what, it seems like less than a year ago, the Fed was worried about getting inflation to 2%, and they kept talking about their 2% inflation goal and their 2% inflation target and all this stuff. And then, here we are, um, headed into the holidays 2021, and with inflation running at 6.2%, which, according to the articles I've seen this morning, um, is the highest inflation in 30 years. So, um, that's a whole there's a whole discussion about that. But at the same time, nobody likes inflation, right? Inflation's the hidden tax, and of course, everybody's saying the administration and the Fed are insisting that inflation's transitory. And they've been saying that since they first admitted there was inflation. And so it's going to be interesting to see, now the last time that from what I've seen, the last time that we had bouts of inflation like this was back in the 70s. I mean, well, they said 30 years, so I don't know. But anyway, 6.2% inflation rate. Um, it's going to be interesting to see how things play out going forward. We don't know if Chairman Powell is even going to be the next Fed chairman, so Biden hasn't made a decision on that yet. So there's a lot of stuff going on, but of course we all know what the market's been doing. More recently here, it's been after this little bit of a dip, which is basically what you'd call it. I suppose, yeah, 3 to 5% is what I call a dip, and this was about 5%. So it was a nice dip. It was long anticipated, but the rally coming off of that dip is just nuts. Um, it's pretty crazy, and of course, a lot of it is based on the mega cap stocks, which we always talk about. And so, I don't know. I saw a statistic recently. It said something like the top 6 or 8 stocks, or even 10. I forget what the exact numbers are, represent like 30 something percent of the S&P, and like the top 10 NASDAQ stocks, and we all know what they are, represent like half of the NASDAQ composite. So anyway, the indexes can kind of be disconnected from the average stock. Um, so we had this big run up, and then of course yesterday Tesla took a big hit. It was down like 11%. And that sort of put like a little topping looking pattern here in the Qs. Now, of course, what's going on right now so far today is obviously we had kind of a sell-off yesterday. Obviously, after this big rally, it wouldn't be surprising to see a bit of a pullback, but typically what happens is, you get a big down day and then a gap down, and then that gap down, moves in the opposite direction to cover up some of the previous day, and that's pretty much what we're seeing right here. So a little bit of a gap down on the indexes and a little bit of a rally to start the day. So what you'd probably want to watch out for, in the obviously the very short term, like, the next few days or whatever, is it if like today, if this went negative, right? Like if we lost this gain and then it hit the low of the day, look out. But in the big scheme of things, in the bigger scheme of things, after this sort of run up, you would expect to see some backing and filling, and so it's never that easy. See, it's like over here. I look for these patterns on the charts. Like back over here in July, you had this big run up, and then a couple of down days like this, and then so everybody expected immediately that, okay, we're going to get a sell-off, and then what happens is the market rallies back up, and then the sell-off does come. So if you just zoom out on the chart and look at this, it's clearly set up and primed for at least a little bit of a pullback. So it remains to be seen what that'll look like. And quite frankly, I'd nothing would surprise me, right? I suppose just looking at this pattern right here, what would surprise me would be a new all-time high, um, in the next few days, right? So it doesn't mean it necessarily needs to sell off, but we're in a different sort of environment right now. I mean, a lot of the news that I see out there in the old days, would spark a big sell-off, especially like today, today's CPI print or whatever. You would think that there'd be more of a reaction, but the market seems to just go on its merry way no matter what's thrown at it, which is what they call a bull market. Like when the market doesn't go down on bad news, that's you're in a bull market. And when the market doesn't go up on good news, you're in a bear market. So anyway, let's look around a little bit. So not a whole lot to discuss with regards to the system right now because there's one pending trade, no open trades. It's been sort of slim pickings because of earnings season primarily. But now, if we get a little bit of a sell-off, which I think there's been quite a few stocks that have actually gotten hit on earnings, and so we may actually start to, I know I said this last week, but we may actually start to see some stocks hitting the pending list, which is it's the perfect time really because if the market's going to have a little bit of a pullback, it's good to have some setups sort of ready and on deck, and so we'll see what happens with that. Russell 2000 is sort of the most interesting. Now, as I mentioned last week, right now we're in the seasonally strongest time of the year, right? So, quite frankly, this would be a perfect time for a little bit of a pullback in the overall markets. Maybe a week or so. I don't know. It's hard to time these things, obviously, but it would seem like the perfect seasonal sort of time for a little bit of a pullback in the market to set things up for, the small caps really always tend to rally towards the end of the year. I can remember so many years around the holidays, things can get pretty exciting on an individual stock basis. Between Thanksgiving and the end of the year. And of course, you get the holidays in there, and there'll be plenty of dull days. So, be interesting to see what the Russell does from here. You can see I'd drawn this box around this huge choppy range that persisted for the majority of this year, and then finally it broke out of the top of it and got a little bit of decent traction, right? So any pullback in the Russell, I'd be looking for, sort of a retest of the top of this range and then see what happens from there. So, and it may or may not pull all the way back there. And of course, you got these moving averages stacked up here just right. The blue one is the 200-day. The orange one is the 50-day moving average. And so those are stacked up. They're both rising, right? One thing that a lot of people don't pay attention to is the slope of the moving averages. But here's one little sort of caveat right now is look at the RSI here. The RSI got up to what's at 71 right now, but the RSI got a little overextended. So the Russell got a little bit overbought. As long as we're here looking at this, I want to look at the RSI on the S&P too. So yeah, the RSI got kind of bring that up a little bit. Yeah, look at that. It looks like the RSI on the S&P, just a few days ago got up to about 76 or so, roughly 77 even. And so, that's basically, it can go higher. Trust me, I've seen the RSI um, go a lot higher than that, but it it's just kind of pushing it a little bit when you get to over 70 like that. So it is what it is. All right, let's see what's going on with my browser here. Trying to, there we go. I was trying to pull the chart off of there. So anyway, yeah, looks like we could be setting up for a little bit of a dip. The most extraordinary thing was basically sort of the angle and the speed at which the market ripped higher off of that last dip. So, um, like I said, there's one pending trade here. We'll look at that real quick, and then we'll just go around and look at a few other things. So J&J still setting up here, pretty decent. Um, Needs a close over that line in order to trigger in. And so, yeah, I mean, this thing's been pending for a long time, but stocks like this, I mean, they tend to base out over longer periods of time. You can see here, like, you basically had about a month between June and July where it sold off a little bit, formed a nice base, and then rallied. And so, it's kind of setting up for the same thing. At this point, any break below these recent lows is probably toast, right? It would not trigger in and come off the list. But as it looks right now, you're getting kind of a little bit of a basing pattern, and it's still looking fairly decent. For some reason, my browser's acting wonky here. There we go. So anyway, still setting up. If it makes a move higher, starts to cup up, then get a close over this line. You can see there's a couple of pokes at the line, but still haven't had a close over it. So what I thought we would do is look around. Let's see. Let's look at some of the sectors. The S&P sectors, just to see what they look like. A lot of them look, kind of similar to the overall market. So there's the XLK technology spider, and I guess kind of a good view of it is, well, I mean that's zoomed out a little further than probably I want to. When I'm looking through charts nowadays, I typically start off like going all the way back to, so I can see what happened during the pandemic sell-off, right? So I mean that's pretty good perspective. And so I find myself looking at charts and zooming back out to where the S&P 500 lost about roughly 30%, 30 to 35%, depending on whether you measure the intraday low of that one day or whatever. There was one day, the very bottom of the pandemic sell-off in the spring of 2020 was kind of that one day, the lowest print was kind of an anomaly on the chart. And so, I believe that at the time I measured the intraday high to the intraday low on the S&P at about a 35% sell-off, but it transpired really quickly. And so you'll see that, if you use closing prices, it was around 30%. But anyway, long story short, it gives a little perspective to anything that you're looking at as far as seeing where we are now. It's interesting to keep that in mind. The crazy thing about where we are now is we're very extended when you look at just about anything. And I don't like to do this on the show because everything gets kind of messed up when I do this on the show, but what I'm about to say is everything seems like it's really extended from their primary trend lines, right? So just take this technology, XLK. There's the primary trend line, something like that. pretty close. I mean, if I just draw a trend line out of the blue, that looks pretty darn reasonable. And so you can see that this latest leg up just, and again, the RSI on this, got up to about 80. So I won't pull that back up because I think that's what messed up my browser. But anyway, so a normal pullback, would take you to the vicinity of this trend line. Of course, it's not going to happen, in a few days. So typically when you get a pullback to a primary trend line in the market, it transpires over a reasonable amount of time. That's what you want to see. Now, back here in I guess last October into November, that was a pretty steep sell-off, kind of straight down, but it was still, that looks like about 3 weeks. So anyway, keep that in mind. The market could rally more, it could chop around up here and that, but eventually a sell-off taking it, the technology spider, say back to this trend line would just be normal, would just be a normal thing. So. Yeah, let's look at the other ones here. Let's see, XLE Energy. Yeah, check it out. I believe yesterday the price of oil, I got CNBC on, but yesterday the price of oil was $84 a barrel. And so around here, the price of gas has gone up. The energy spike, this is as far back as I can go on this. So you can see energy, boy, that's a sloppy looking chart. It's really messy, but the problem with the XLE is that I know in the past I've used XOP because I think it's a better ETF that represents oil and gas exploration production, because XLE is too heavily weighted in ExxonMobil and Chevron Texaco. Like those two stocks make up like 30% of XLE. So this is actually a better view. It's kind of interesting that, here's the thing. Everybody knows that the current administration is sort of anti-oil, anti-fossil fuels. There's no question about that. And so, let's see, oil is $82 a barrel, WTI, $82 a barrel right now. And so I mean the price of oil was lower than this when this was higher. So this is kind of and it's hard to tell. I mean this is actually a pretty bullish looking chart, right? This is like a 2-year chart here. So this kind of looks pretty good, but everything's moving to ESG investing, and this is sort of the black sheep of the But yeah, who knows? I mean, we've had a pretty good rally here, so same sort of thing. I mean, on the short-term basis, it's kind of extended. There's a lot of reasons to perhaps avoid energy, but let's move on here. XLC. Now this is this communication services spider includes like Google, I believe, and they rejiggered these sector spiders a while back. So this has got kind of an interesting pattern on it, be honest with you. Real big persistent trend, and you can see that this kind of started selling off when the overall market had that last dip, and it's never recovered. I mean, it hasn't like recovered and made new highs. So quite frankly, this chart has a potential setup here. Now, let me see if I'll just stick a line like, say, well, I guess I'll just put it up at those highs, see what it looks like there. So yeah, there you go. Yeah, see, this is why I don't like to do this so much live. Well, I shouldn't say I don't like it. It's just not as easy as it used to be. But there you go. That looks pretty reasonable. So yeah, this is potentially setting up. Suppose we get a market sell-off and this kind of, bounces around or whatever, what I would be watching for here down the road would be like a cupping formation, and where it starts to break back above this, because then you get one of those this is actually a pretty decent base that's forming here. So keep an eye on that. XLC doesn't look too bad. I'm gonna move really quick here through the rest of them. Financials, boy, financials have been pretty strong all year. Got like a little bit of a flag forming here, and so looking fairly decent, although really extremely low volatility here. So industrials, the infrastructure bill, right? Which passed, maybe setting up the industrials. They kind of broke out here. This is a good looking chart too. It's a lot to be interested in here, and of course, there you go. So that's a pretty decent little breakout right there. It has rallied right off of a bounce on the 200-day moving average, and so this, quite frankly, this little rally here could just be getting started. Kind of like over here. You started rallying and you got to a certain point, and then it just sort of kept going. There was a lot of inertia along. Oh, wow. A lot of inertia in this rally back here towards the beginning of 2021. So, um, if the same thing transpires, industrials could be going considerably higher. So, like I said, if we do get a sell-off in the overall market, it's going to obviously affect these, but that's not necessarily a bad thing. As a matter of fact, if this were to sell down and sort of retest this, but I think the industrials actually look pretty good here. So let's move on real quick. Here's one that looks a little, I mean, look at that rally here that we just had. And so, yeah, this one looks vulnerable to a little bit of a sell down here, right? I mean, and look at that pivot. Look at that pivot high right there. I mean, that is, if I change that to a candlestick chart, which I don't really, these candlestick charts on this particular platform are not my favorite. So I can see the same thing here with the open high low close bars. But anyway, that's what are they? Not an evening star, but I mean it's a clear reversal sort of pattern here. And so pivot high, perfect pivot high after a big run up. So this is one that looks like it's sort of primed for a sell down, and that doesn't mean that it's going to go down every single day, and that doesn't mean it can't rally back up. But you know, if candlestick patterns, are still viable and still valid, which in past years I've questioned, then this is just as textbook as it gets. Quite honestly, it's as textbook as it gets. You got that big, huge, almost really it's a parabolic run up. You got a parabolic run up followed by an evening star or whatever you call that thing, doji, but and then pivot high is what I like to call it, and then you have 3 days with, well, today's not over, but you have 3 days with lower highs after that, and so clear textbook reversal pattern. And so then, how it plays out remains to be seen, but this is not something that I would think would just be something you'd want to buy right away. So, unlike the industrials, which actually look pretty good. So, let's see, moving on here. Real estate. Real estate, it had to sell down and then recovered, and now it's just hovering right around the all-time highs here. So, you know, something like this remains to be seen what's going to happen. There's no real clear definable trade here. Quite honestly, when this thing sold down and then started to cut back up, that was the opportunity. So that's what I look for is, like even back here, you had a little bit of a sell down and then you start to see that cup form. Let's see, moving on. XLB. XLB is materials, and you got a little bit of a breakout here too. So you can see that just the past couple of days here. Whoops. Just the past few days here. Um, this is, same thing here. This pulled back to around the 200 day, and so we're getting a breakout here. And hey, with inflation running hot and the price of materials going up, this this particular breakout may have some legs. The only thing about it is typically I like to see, like back over here, you got a little bit of a breakout and it was short-lived and then it came back right back to where it was. And so if the overall market is primed for a little bit of a dip, then, it's not going to surprise me to see some of these ETFs come in with it. So, perhaps a retest of that area. That's the big strong support here with the materials. But materials look pretty good. Industrials look pretty good. Moving on here, and by the way, on my other screen here, I got a list of all these sectors, and so it's a little hard to know them all. Consumer staples right up at the highs, hanging in there. Theoretically, the consumer is strong, even though inflation's picking up. Headed into the holidays, strong time of the year, so this is still hanging right up at the highs, and it's the same type of thing. A lot of times they tend to make nominal new highs. Stocks, ETFs, sectors tend to make nominal new highs and then sell off again, right? And so my my favorite time, I think the best time to start, looking for an entry is after a pullback rather than chasing breakouts. And it depends. I mean, if you're day trading, and sometimes you get these breakouts and they just keep going. Happens a lot, but typically you get a breakout, and then at least, depending on how far it pulls away, you get at least a pull back to the area of the breakout to retest it. So let's see, a couple more. XLV Healthcare got a pretty decent look to it. Sell off, rally, kind of hanging in there. Yeah, it's hard to say if this one's gonna push up to new highs or whether it's just gonna hang around here. But that's a fairly decent look, little pattern. I mean, it's hanging in there. So, and last but not least, XLU, which is pretty boring. I mean, the utilities, but let's see. There's your pandemic sell-off in the utilities. Wow, that was something. Um, Pretty amazing because utility. This is like one of the theoretically safer and more stable. There's not a whole lot of volatility. And let's see what the dividend yield on XLU is. Trying to pull it up here, but I don't see. I don't see. For whatever reason, Finviz is not showing me the dividend yield. Oh well. All right, so that's that. Took a look around at the different sector spiders. Qs look a little vulnerable here. Filled the gap, and so this topping pattern is still kind of valid even with the Qs in the overall market. So it wouldn't surprise me to see a little bit of a pullback. But the funny thing is here recently, when we had like this we hit like 8 new highs in a row, which I don't know if that's ever happened, or actually it's happened a couple times in history. I don't think the market's ever hit like 9 days in a row with all-time high. I think that was going to be the record. Like it's happened 0 times in history. So anyway, kind of due for a little bit of a pullback, and now is the perfect time, like I said before, as we're just entering the seasonally strongest period of the year, it'd be the perfect time for a pullback and just some retrenching after what we've seen here. So, like on the Qs here, a retest of the area of the breakout would be not unreasonable. And then obviously, finding some support in this area would set everything up for, big end of the year rally. So, but I mean, who knows? I mean, in 2008, I remember 2008 was one of the best starts to a year in like, X amount of years, and it had great January, as you recall. And then at the end of the year, as about this time of year, everybody was talking about, a year-end rally, and then it fizzled, and 2008 or 2018 ended up being a down year to the surprise of everybody. So, but that was kind of an anomaly. I mean, the market's just been on a tear each year, every year, but 2018 was sort of the anomaly where the market actually, pulled back. Um, Towards the very end of the year. So anything can happen. Anyway, keep an eye out for some new pending trades as we go forward, and we'll just let this sort of let the market tell us what it wants to do. But I wouldn't be in any rush here to load the boat. If anything, this little bit of a dip here, and of course, individual stocks. A lot of high flying individual stocks have been getting creamed when they release earnings, and so you've probably seen some of that, and so that's exactly why we're don't jump into things ahead of earnings, and we don't hold anything over earnings. Although the last one we closed over earnings, AMD, was yeah, no huge surprise, right? No huge surprise. But I mean, we just had to close it out ahead of earnings, right? There was a little bit of a weird sort of earnings reaction here, but you can see what happened afterwards. AMD is definitely a darling of Wall Street. Some of you that have been around for a long, long, long time may recall Doug and I having a discussion. This is years ago when AMD was like $2. It moved from a dollar something to over $2. And we had a big long discussion about it. So it blows my mind to see this thing at, at 150 bucks here. So let's see. It wasn't really that long ago, right? So there's the monthly chart of AMD, back over here in 2015, 2016, when this thing started moving out of that base. Yeah, it was a couple of bucks, couple of dollars here in 2016. So this must have been, it wasn't as long ago as I thought it was, but that must have been we were talking about it, because I remember distinctly the whole conversation uh, revolved around AMD, going above from a dollar something to above $2, and so look at it now. But anyway, there's quite a few stocks like that out there that I was looking at Tesla. As long as I'm on this monthly chart, might as well pull this up. I was looking at this yesterday. I like to look at when a stock has a lot of something like Tesla that's really super closely watched. Everybody's talking about it and that. And this monthly chart, boy, is interesting. Because, the daily fluctuations, obviously it was down 11% yesterday. But when you look at this, you try and see, it actually looked more like this yesterday, right? Because apparently today it's having a little bit of a rally. But, yeah, there you go. Big sell-off, gap down, rally up. That's pretty much textbook. So, but that doesn't necessarily mean that the sell-off's over. But when things get overdone in either direction, they tend to at least spend a little bit of time sort of reverting, right? So there you go. Anyway, thanks for tuning in. I'll see you back here next week.